Alright guys, welcome to lesson 7, Fractals. In this lesson I'm going to go over what a fractal is and how I use fractals in my day-to-day trading. So first off, to clarify, there are multiple kinds of fractals in trading. The fractals I'm going to be talking about are Bill Williams fractals. He is a notorious trader who's come up with a few indicators over his trading career, and fractals are one of the most well-known indicators he has created. A fractal is a 5 candlestick pattern in which the middle candle has the highest high or it has the lowest low. This forms a swing high and this forms a swing low. And these levels, or these fractals, excuse me, can be used as great levels for support and resistance. Swing highs typically create resistance points, and swing lows typically create support points. Looking at Bitcoin here, first off, if you don't have the fractals turned on, just go to indicators, type in fractals, and it should be BW fractals or Williams fractals on the built-in section of TradingView. So for Bitcoin here, you can see these little fractal indicators. The green are up fractals, the red are down fractals. The down fractals form swing lows, and the up fractals form swing highs. So when trading, what you want to look for is areas that make clean swing highs or swing lows. Ignore the fractals that are in sideways consolidation patterns. Because the way the fractals are designed, they will give you fractals when price is flagging. You don't need to look at those fractals specifically, but flagging patterns are some of the best support and resistance patterns. So when you have a bull flag or a bear flag, these give you beautiful support and resistance levels from that consolidation. But you don't have to pay specifically you don't have to pay attention specifically to the fractals themselves. Just understand that in consolidation, it gives you great support and resistance. But when you're looking at tops and bottoms, that's when you really want to pay attention to the fractals. So you have these swing highs here, swing low, swing highs. That's when you really want to look for the fractals. So how do you trade them? So when you have a swing low, like I was saying earlier, they typically form support levels. And you can either use the bodies or the wicks as support levels, or you can use both. Typically, I will see where price is reacting the strongest, and that's where I will use either the wicks or the bodies. Most of the time, I prefer to use the bodies, but sometimes, as we can see here, the wicks are very strong support as well. So when you form swing highs, you can take the bodies or you can take the wicks, and same is said for swing lows. So when looking at fractals, what you should understand is when you're in an uptrend, your down fractals should be increasing. You should be forming higher swing lows, and your up fractals should be forming higher swing highs. That is the definition of an uptrend: higher swing highs and higher swing lows. So when you're looking at your fractals here, you want your fractals to be increasing both towards the upside and downside. If they do not increase, that means your trend is either weakening or it is failing, as we can see here with this fractal. This swing high forms a double top with the previous swing high. So what do we see here? We see a swing low into a higher swing low. We have a swing high into a higher swing high. but then our next swing high does not make a higher swing high. It actually makes a double top. So if we took our price level tool here, the horizontal ray, and we put a resistance point on either the body or the wick, we can see that this swing high was not able to form a higher swing high. Price failed at that top and was no longer able to increase its lows and increase its highs. This is telling you that the trend is either weakening or it's completely failing. Where we look to see if price is either weakening or completely failing, we look for the previous fractal. So here we have our double top formed by these two swing highs. So when this double top is formed by this swing high here, we look to our previous fractal, which is this swing low. If this swing low is in turn broken from that double top, which it typically will be, remember when trading double tops and double bottoms, your previous support is most likely going to fail. So what we see here is we have a double top. The previous support is broken. It does fail. And as we've said multiple times in previous lessons, you look for the first test of that level to see if it's a false break or the downtrend is going to continue or the uptrend is going to continue. Here we see a break here, and then the first test, you could have taken a short on this first test when it turned red, stop loss above the level, target a break of the swing low that created the test, or you can target the swing low itself. So you could target that, or you can target a break, and you could target previous fractals. So once again, double top creating that resistance, making the uptrend fail. Previous support is broken due to the double top. Fractal is in turn tested by a first test. Could have traded the first test. You could have traded the double top. Stop loss on the double top would have been there. Target of the double top would have been a break of the previous support. If you traded the support, you could have traded a break, or you could have traded the first test. Your stop loss would have been above the support on both of them. Your target would have been a break of the swing low or a previous swing low. So what we see here after the break is we see first test into a lower swing low, into a lower swing high, creating that downtrend, into another lower swing low, another lower swing high, a smaller swing high, so it's still low, but it's not a very low high. It's creating more of a bottom. And then we start to see this swing low shift the trend. It is bouncing off of this swing low here, and even this swing low here. What we're seeing is this double top turned into a double bottom. This was no longer able to make lower lows and lower highs. It could not make a lower low. It did make a lower high, but it did not make a lower low. So this trend was bottoming. Let's delete all this so we can make this more clear. This was not able to make lower swing lows. This created one major swing low. And this major swing low was actually able to create a higher swing high. So locally, this is technically on an uptrend. We see a higher swing low, a higher swing high, all the way up until it can no longer make higher swing highs. It made a double top here, and like we said earlier, a double top is typically going to break the previous support or resistance. So this forms another double top here off this swing high. It's not exactly a double top, but you can see that price begins to fail at that same level. Your previous support would be these lows here, created by these swing lows. Your previous support is usually going to be broken on a double top or a double bottom. So you could have either taken the trade on the double top somewhere here, stop loss above the level, or you could have taken the trade on the break of the level or the first test of the level. So once again, we had another first test of that previous level. Like I said earlier, these flagging patterns give you beautiful levels of support and resistance. So watch out for those levels to be tested or broken. So here we have the break of that level created by these swing lows and swing highs, or fractals. We had the test of that level confirming the break. You could have taken the trade once it pushed off of that level, stop loss above the level, target where the level curled, or a break of that curl. Once again, we have the same pattern forming a new downtrend. Lower swing lows, lower swing highs. But then here we start to flag. Price goes sideways, creating new levels. You could have either traded a break of this little down fractal here, or you could have traded a break of this down fractal here. These both create flagging supports. You have the break there, it is not tested. You have a break here, it is not tested. You could have traded it, you could have targeted this low. If you took this break, you could have targeted this low, or a break of that low. And then you would have targeted the previous swing lows. So now that we've seen it on the downside, let's look at it on the upside. Let's go to a shorter time frame, like an hour here. So Bitcoin lately has been doing a lot of these flagging patterns. It's been breaking, doing long squeezes, short squeezes, creating long flags, which is perfect for this style of trading. When it creates these flags here, you just take the flagging patterns, the highs and lows. Like I said, you can take the bodies or you can take the wicks. Both are proper. So when it creates this flag here, you get a lot of fractals. This swing low created this swing high, in turn created this swing low. Or you can call this whole thing one swing low, one swing high. Both of them are proper. I would typically say this strong move after the burst is a swing high, and then the lowest point of the flag is the swing low. So now you have a higher swing low, you have a higher swing high, creating an uptrend. You get your support and resistance levels here. When this is broken, you can trade the break. You would have gotten wicked a few times here, but if you wait for confirmation, if you wait for a close, or if you wait for a clean break, you should have been fine here. So if you would have got it on a break here, your stop loss would have been below the level or below the entire flag, depending on your risk tolerance. And your target would have been either the top of the flag or previous levels. You could have targeted this low here, you could have targeted that high there, or even you could have targeted that high there. You can see we broke the level right here, we hit that low, began to flag, tested this level, and then hit the next level. So all of which would have been proper. So once again, what you always want to remember when using swing lows and swing highs is when you're in an uptrend, you need to be forming higher swing lows, higher swing highs. When you're in a downtrend, you need to be forming lower swing highs, and lower swing lows. If you begin to flag, then use these flags as your support and resistance levels to determine when a breakout or a trend reversal is going to happen. So we have our breakout here, and then look what we have here. The first test of this level. So this flag creates this level. This test is a very good trade entry. You could take a trade on the level, stop loss below the level, and then you target, as always, previous swing highs or previous swing lows. You could have targeted this flag here, or you could have went back even further and targeted this flag here. So this gave you the break of the level. That gave you the first test of the level. And then you had another break of this previous level here, this flagging level. You could have taken the break here, targeted the next level, or the next level, stop loss below the level. This type of trading is very profitable because you use very tight stop losses. You can trade this as a breakout trade plan, or you could trade it as a more of a support resistance trade plan where you look for the first test, you don't take the breakout. So if you wouldn't have taken the breakout here, you would have waited for the first test, both of which would have been highly profitable. With both of these trade plans, you would have maintained the same stop loss below the level. And that stop loss can be based on previous levels as well. So you could look at lower levels created by these lower swing highs. So for example, if you, let me color code these to make it easier to see. If you took this breakout trade here, you could put your stop loss below this level, or you could put it below this level, depending on your risk tolerance, your risk to reward. Same thing with this. You could have taken this trade here, stop loss below that level, or below this level, depending on your risk tolerance. The same is said for the short side during these big up moves here, the big flagging bull flag patterns. You can still play these to the short side even though they are very bullish. And you can play them to the short side by trading the same exact way you trade them on the upside. We went over this earlier, but just to reiterate this on an uptrend, when you create this flag and you create that level, when that level is cleanly broken, you got wicked a few times here. So depending on how you would have traded this, you might have gotten stopped out. Once you had that clean break, if you took that clean break, your stop loss should have been above the high, that level, or above this level here. And your target should have been the previous level. So if you took this break, that is your target to the downside. And you could have actually reversed, stop loss, target, the level. When trading like this, you want to use whatever you're using, indicators, moving averages, trend pattern, candlesticks. You want to be doing basic technical analysis to determine the trend, to determine which way I should be trading these levels. Should I be trading the breaks? Should I be trading the test? You shouldn't just be trading them all in one direction. You should be determining which way to trade them based on your other analysis. Just know that in trading these swing highs and swing lows, the best patterns to look for are bull flags and bear flags. And also double tops, triple tops, or double bottoms, triple bottoms. Those will all give you very strong swing high and swing low resistance and support levels. Another thing to go over before we end this lesson is when you have untested swing highs and swing lows, this can be another area to target in your trading. So if this is our swing low here, this is when you're looking to the right, not looking to the left, meaning you're looking for what's going to happen in the future, not what has happened. You create the levels off previous swing highs, swing lows, breakouts, same thing we went over the entire lesson. But you look for the levels that have not been tested since they were created. So for example, until recently, this level was not tested. So when we made this swing low here, this was our previous swing high that has not been tested. So if we took a reversal trade on this swing low, this could be a very good target for our reversal trade. So say we got in on this piercing candle, this engulfing candle here. Our target would have been this untested level, and we would have gotten out almost perfectly before price began to fail. Now, if we took this failure of this swing high, this almost double top pattern, you would be targeting the previous levels that are untested. Those are your two levels that are untested. So if you took this trade here, you would be targeting these two previous levels that are untested, or this bottom target that is untested. The reason you target them is because they are strong areas of support resistance. They are strong areas of confluence where price has reacted heavily in the past, and it will typically react heavily there in the future. Now, using everything that we've learned in this lesson, in our next lesson, we are going to talk a little bit more in depth of my price levels, how I use them as targets, how I use them as support and resistance, using fractals and swing highs and swing lows. I hope you enjoyed this lesson. Next lesson is lesson 8, price levels. Thank you.